Imagine a life where money worries are a thing of the past. Meet Jane, a mother of two who once struggled with debt, living paycheck to paycheck. Then she discovered some simple yet powerful personal finance lessons that changed everything. Now, Jane not only manages her money well but also enjoys financial peace and security. This video will share the top 10 personal finance lessons that can transform your life, just like they did for Jane. From budgeting and investing to understanding credit scores and the importance of emergency funds, these lessons cover all the basics you need. They are easy to follow and can have a big impact on your financial health. Ready to take control of your money and your future? Let's dive into these life-changing lessons and start your journey to financial freedom. Lesson 1: The power of budgeting. Meet Mike, a young professional who was always broke by the end of the month. He didn't know where his money was going and felt constantly stressed about finances. Then, a friend introduced him to budgeting. Mike decided to give it a try, and the results were amazing. Budgeting is simply making a plan for how you will spend your money each month. It helps you see where your money is going and allows you to make better decisions. Start by listing your income and all your expenses. Divide your expenses into categories like rent, groceries, entertainment, and savings. Make sure your expenses don't exceed your income. Mike found that by tracking his spending, he could cut out unnecessary expenses. He stopped buying expensive coffee every day and started cooking at home more often. These small changes added up, and soon he had extra money to save and invest. Budgeting gave Mike control over his finances. He felt more confident and less stressed. Now, he has money set aside for emergencies and can even afford to treat himself occasionally without guilt. By following a budget, you too can achieve financial stability and peace of mind. Lesson 2: Understanding debt. Meet Sarah, a recent college graduate who found herself drowning in credit card debt. She was using her cards for everything and only paying the minimum each month. The interest kept piling up, and she felt trapped. Then she learned about managing debt, which turned her situation around. Debt can be good or bad. Good debt includes things like student loans or a mortgage, which can help you invest in your future. Bad debt, like high-interest credit card debt, can quickly spiral out of control if not managed properly. Sarah started by listing all her debts and their interest rates. She realized that the high-interest credit card debt was the most dangerous. She made a plan to pay off that debt first by putting extra money towards it each month, while still making minimum payments on her other debts. She also learned to avoid taking on new debt by only using her credit card for what she could afford to pay off each month. This way, she avoided additional interest charges and stayed within her budget. By understanding the difference between good and bad debt and making a plan to tackle high-interest debt first, Sarah regained control of her finances. You can do the same by being mindful of your debts and managing them wisely. Lesson 3: The importance of emergency funds. Imagine you suddenly lose your job or your car breaks down unexpectedly. Without any savings, such emergencies can turn your life upside down. This is what happened to Tom. He was living paycheck to paycheck with no savings when his company downsized and he lost his job. The financial stress was overwhelming. Then Tom learned about the importance of having an emergency fund. An emergency fund is money set aside to cover unexpected expenses, like medical bills or urgent repairs. Financial experts recommend saving 3 to 6 months' worth of living expenses in this fund. Tom started small. Each month, he set aside a little money from his paycheck. He treated his emergency fund like any other bill that had to be paid. Over time, his savings grew, giving him a cushion to fall back on. A few months later, Tom's car broke down again. This time, he didn't panic. He used his emergency fund to cover the repair costs and continued his daily life without stress. Having an emergency fund gave Tom peace of mind and financial security. By setting aside even a small amount each month, You can build your own safety net, protecting yourself from unexpected financial shocks and ensuring a more stable future. Lesson 4. Investing early. Meet Lisa, a young professional who started investing as soon as she got her first job. While her friends spent their money on new gadgets and fancy dinners, Lisa decided to put a portion of her paycheck into investments. This small decision made a big difference over time. Investing early is important because of something called compound interest. This means the money you invest earns interest, and then that interest earns interest too. The earlier you start, the more time your money has to grow. Even small amounts can add up to a lot over many years. Lisa began by putting money into a simple savings account, then moved on to stocks and mutual funds as she learned more. She watched her investments grow little by little. After a few years, she was pleasantly surprised by how much her money had grown. Lisa's early investments gave her a financial cushion and helped her feel secure about her future. She didn't need to invest a lot all at once. Starting with small amounts was enough to make a big impact. By starting to invest early, you can take advantage of compound interest and build a solid financial foundation. It's never too early to begin, and the sooner you start, the better off you'll be in the long run. Lesson 5. Credit scores matter. Meet Alex, who wanted to buy a house. When he applied for a mortgage, he was shocked to learn that his low credit score meant higher interest rates. This made the house he wanted much more expensive. Alex realized that understanding and improving his credit score was crucial. A credit score is a number that shows how trustworthy you are with borrowing money. It ranges from 300 to 850. The higher your score, the better. Lenders use this score to decide if they will give you a loan and what interest rate to charge. Alex's low score was because he often missed payments and had high credit card balances. To improve his score, he started paying his bills on time, reduced his credit card balances, and didn't open new credit accounts unnecessarily. Over time, Alex's credit score improved. He was able to get a better interest rate on his mortgage, saving him thousands of dollars. A good credit score also helped him get lower rates on car loans and even better deals on insurance. By understanding and taking care of your credit score, you can save money and have more financial opportunities. Pay your bills on time, keep your credit card balances low, and check your credit report regularly to make sure it's accurate. Lesson 6. Smart spending. Meet Emily, a young professional who always seemed to run out of money before her next paycheck. She loved dining out, shopping for new clothes, and treating herself to little luxuries. But her bank account was always empty, and she had no savings. Then she learned about smart spending, which changed her financial life. Smart spending means being mindful of how you use your money. It's about making choices that align with your priorities and long-term goals. Emily started by tracking her expenses to see where her money was going. She was surprised to find out how much she spent on things she didn't really need. Emily began making small changes. She cooked more meals at home, shopped for clothes less often, and looked for free or low-cost entertainment options. She also made a list of her financial goals, like saving for a vacation and building an emergency fund, and kept these in mind when deciding how to spend her money. These changes helped Emily save money without feeling deprived. She still enjoyed life, but in a more balanced way. She felt more in control of her finances and less stressed about money. By practicing smart spending, you can stretch your money further and reach your financial goals faster. It's about making thoughtful choices and prioritizing what truly matters to you. Lesson 7. The value of multiple income streams. Meet John, who relied solely on his 9 to 5 job for income. One day, his company downsized, and John lost his job. He had no other source of income and struggled to pay his bills. This experience taught John the importance of having multiple income streams. Having more than one way to earn money can provide financial security and peace of mind. If one income stream stops, you still have others to rely on. John decided to explore different ways to make money besides his main job. He started by turning his hobby of photography into a small business, taking photos at events and selling prints online. He also began freelance writing in his spare time. These side hustles didn't just bring in extra money, they also allowed John to pursue his passions. John's efforts paid off. When he eventually found a new job, he continued with his side businesses. The extra income helped him save more, invest, and build an emergency fund. He felt more secure knowing he wasn't dependent on a single source of income. By developing multiple income streams, you can create financial stability and open up new opportunities. It doesn't have to be complicated. Start with something you enjoy or a skill you have and grow from there. Lesson 8. Financial education. Meet Sarah, a young woman who always felt confused about money. She didn't understand how to manage her finances, invest, or save properly. She often made poor financial decisions and ended up in debt. Then she decided to learn more about personal finance, which changed her life. Financial education means learning how money works and how to make it work for you. Sarah started by reading books and articles about personal finance. She watched videos and listened to podcasts by financial experts. She also took a basic personal finance course online. As Sarah learned more, she applied her new knowledge to her own life. She created a budget, started saving, and paid off her debts. She also began investing small amounts of money and saw it grow over time. Sarah felt more confident and in control of her financial future. Financial education helped Sarah make smarter decisions and avoid common money mistakes. She realized that understanding money is a skill anyone can learn, and it's never too late to start. By educating yourself about personal finance, you can take charge of your money and achieve your financial goals. Start with simple resources like books, online courses, and expert advice. The more you learn, the better equipped you'll be to handle your finances wisely. Lesson 9. Retirement planning. Meet David, who always thought retirement was too far away to worry about. He spent most of his money on immediate pleasures and didn't save much. Then, a friend explained the importance of starting early with retirement planning. David realized he needed to change his approach to secure his future. Retirement planning means saving and investing money now to ensure you have enough to live comfortably when you stop working. David learned that the sooner you start saving, the more your money can grow over time thanks to compound interest. David opened a retirement account, like a 401k or an IRA, and began contributing a small percentage of his paycheck each month. His employer also matched part of his contributions, which helped his savings grow faster. He made it a habit to increase his contributions whenever he got a raise. David also diversified his investments, putting money into stocks, bonds, and mutual funds to spread the risk. Over time, he watched his retirement savings grow, giving him peace of mind about his future. By starting retirement planning early, David set himself up for a comfortable and worry-free retirement. You can do the same by saving regularly, taking advantage of employer matches, and investing wisely. The key is to start now, no matter how small the amount. Lesson 10. Giving back. Meet Laura, who always felt something was missing, even after achieving financial success. She realized that true fulfillment comes not just from having money, but from helping others. Laura decided to start giving back to her community. Giving back can mean donating money, volunteering your time, or sharing your skills to help others. Laura began by donating a small percentage of her income to local charities and volunteering at a nearby food bank. She also offered free financial literacy workshops to help others manage their money better. Laura found that giving back made her feel more connected to her community and gave her a sense of purpose. It also brought her joy and satisfaction, knowing she was making a positive impact. By giving back, you can enrich your own life while helping others. It doesn't matter how much you give. What matters is the intention and the difference you make. Start small and see how rewarding it can be to contribute to the well-being of others. Now, if you want to learn how to achieve financial success, then watch this video next. And if you made it to this point of the video, please like and subscribe to the channel to see more content like this. Thanks for watching, and I'll see you in the next video.